Okay, let's dive in. We've got some really fascinating source material today, shared by you. And it tackles a pretty fundamental question, right? What actually creates value?
Yeah, it goes right to the core.
So our mission here is to really dig into this source, understand its main argument, and it kind of pushes back hard on a common idea.
Which idea is that?
The idea that, something's value just appears because it gets listed on a big exchange.
Ah, right. The listing equals value equation.
Exactly. And this source makes a pretty bold claim. Exchanges don't create value. Communities do.
And they frame it as a real revolution, don't they?
They do. Strong words.
Well, what I find compelling looking at this source is how it tries to back that up. It doesn't just theorize.
How so?
It uses historical examples. It tries to show how it believes value has always formed, sort of, across different times before applying it now.
Okay, interesting. So where does it start?
Right. It takes us back. First example, gold, way back in 1910.
Gold in 1910. Oh.
The source points out, look, gold obviously had immense value then, undeniable.
True.
But crucially, the source says this wasn't because it was listed on some, global exchange infrastructure like we think of today.
So where did the value come from, according to them?
It argues it came from, human consensus. People agreed it was desirable, plus its scarcity. And critically, the trust people had in it.
Trust is a store of wealth.
Exactly. So the value, the source contends, existed way before and independent of any big formal trading venue.
Okay, that makes sense for gold. What's next? Does it connect that to something more modern?
It does. It jumps forward quite a bit, actually, to Bitcoin in 2010.
Ah, okay. Early Bitcoin. That's quite the contrast.
A huge contrast. And the source highlights just how different it was. The price back then, tiny, like 0.008 or something minuscule.
Wow. And definitely not on the major exchanges we know now.
Not at all. And that's the source's point. It argues that Bitcoin, just like gold maybe centuries before its initial value, however small it was built by its very early community, the developers, the miners, the first few people actually using it, believing in it.
So the community built the foundation first.
That's the argument. The source insists the exchanges came much, much later. They essentially followed the value that was already starting to form within that community. They didn't create it.
Okay, I see the parallel they're drawing. Gold, Bitcoin. Value rooted in consensus, utility, community before the big markets catch on.
Precisely.
So how does the source then use these examples, these historical threads, to talk about the current situation it focuses on?
Well, it brings this whole perspective to bear on what they refer to as GCV, as discussed in the source.
GCV, okay.
And the source posits that GCV is basically following that same historical playbook, mirroring that pattern of value formation.
But how? Is it just waiting for people to believe?
No, it's a bit more active than that, according to the source. They specifically mention using something called Web3 intelligence.
Web3 intelligence. What does the source seem to mean by that? Is it AI or?
Not necessarily AI in the way we usually think of it.
Right.
Based on the description in the source, it sounds more like leveraging, digitally native communities, blockchain tools to deliberately build real utility and a functioning ecosystem first, before worrying about exchanges.
So focus on making it useful within its own network.
Yes. The emphasis is on demonstrating real-world use, getting transactions happening within that community.
Right. And the source actually lays out steps for this, doesn't it?
It does. Step 1, as they see it.
Yeah.
Build that real ecosystem. Make something that works and people use.
Step 1, ecosystem.
Got it. Step 2. Let the utility, the actual use, the transactions, let that define the intrinsic value. Let it emerge organically from the activity.
So value comes from function, not just speculation.
That's the idea. And only then, step 3, exchanges might come into the picture. But they follow the value that's already been established.
They follow, they don't lead.
Exactly. The source argues exchanges are reactive in this model, recognizing value rather than creating it out of thin air.
Wow, okay. That really is a complete flip of how many people think about it, isn't it?
It really is.
And the source is pretty blunt about it.
Very blunt. It basically says, if you're still stuck on value equals exchange listing, then you're missing, and this is their phrase, the real revolution.
Strong stuff. They're arguing value creation, at least in some cases, is fundamentally bottom-up, community utility, way before an asset hits a major market.
That's the core message coming from this source, yes.
So, okay, let's pull back a bit. If we synthesize what this source is saying, it really challenges that default assumption that a listing on, say, Binance or Coinbase is where value starts.
Absolutely. According to this source, in these kinds of community-driven projects, real value comes from building something functional.
Fostering utility.
Facilitating transactions.
Building trust.
Right. All things that they argue exist before and are separate from whatever price an exchange might eventually display.
So the implication, if you follow the source's logic, is that just waiting around for an exchange listing might mean you're not just late.
You might be looking in the completely wrong direction for where the actual value is being generated in the first place.
Right. So based purely on the source material we've dug into today, a final thought for you, the listener.
Yeah.
If value, as this source claims, really does stem from consensus, from utility, from the community itself, long before the traditional markets get involved,
then what does that really mean for how we measure worth, how we think about value?
Exactly. What does it imply about the usual metrics we rely on? What stands out to you after hearing this perspective from the source? Something to chew on.
Definitely food for thought. Until next time.